Today is March 15th, 2014. This is episode 92. This program is intended for information and educational purposes only. Cryptocurrency is a new field of study. Consult your local futurist, lawyer, regional manager, investment advisor, and pathologist before making any investment decisions for yourself. Content on the LTB network may also cause your brain to hurt, what with the ideas and all. Welcome to Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. Thanks to everyone getting involved over at ltbcoin.com. If you'd like to learn more about LTB Coin and be part of the initial community distribution, please check out ltbcoin.com. My name is Adam B. Levine, and today we're playing a bit of catch-up. The last time I spoke with David Johnson, co-founder of the Bit Angels Network, he told me that he has 28 projects he's investing in so far surrounding the distributed applications sector. LTB correspondent Jonathan Mohan caught up with David not so long ago at the Miami conference to talk the Master Protocol and our future of distributed apps. Then, Stephanie Murphy submits her first interview from the Texas conference, which took place last week outside the city of Austin.
It's Marco Pierboom. It's a Dutch name, so I'm not even going to attempt to tell you people.
They talk coin voice and coin formal, zero trust security, and from scratch open source Bitcoin implementation. Not to be missed. And finally, Jonathan Mohan catches up with Sheldon Weisfield, an early RoboCoin owner with CoinVault ATMs. They get inside the head of the early ATM operators and the thought behind these early run machines. But first, you asked for it. Here it is. Dogecoin. The very currency phenomenon that adds the fire of memes to the house that Bitcoin built. Today on Let's Talk Bitcoin, we're joined by Josh Mullen, the creator of the Dogecoin Reddit tip bot and a Doge aficionado who agreed to lend us his perspective on the topic.
I'm doing pretty good. How about yourself?
I'm doing pretty good. So I'd like to play a clip for you kind of to start things off. I was trying to figure out how to pronounce Doge this morning, and I was like doggy because I'd heard everybody say doggy. And so I bothered looking it up, and I discovered that the origin of the Dogecoin name actually is from like a web cartoon that I was very familiar with in high school in like 2002 and 2003 called Homestar Runners. Let me play this clip for you.
I'm almost done with these third quarter projection analysis spreadsheets and still no sign of...
What is up, my dog?
Oh, I am not your dog.
Wandelman, you quack me up. Quack me up. That's why you're my D-O-G-E.
Your Doge? What are you talking about? I'm strong bad.
Okay, and so like that is... literally the genesis of the name of what eventually, became Dogecoin. So just taking a step back from this for a second, I'm usually a Bitcoin guy, and I'm interested in altcoins that do kind of innovative things. And Dogecoin does make a few changes, but I'm curious, tell me from your perspective, what got you into Dogecoin and, what's attractive about it?
I was originally into Litecoin. I was mining Litecoin for a while before I even found out about Dogecoin. And it was kind of around the same time where it seemed like every other day or so, another altcoin was coming out. And it just got to be so absurd that, I was on the Bitcoin Talk forum one day and I saw Dogecoin and I'm like, oh, this is great. I got to check this out. So I started mining, got a couple million because it was the first day. Just as a joke, I thought it was funny, and I started giving them to my friends, went right back into mining Litecoin after I got a few million, and then it just took off.
There's a disconnect in what you said there that I want to address. You said that it was ridiculous, there were too many coins coming out, and then Dogecoin comes out and you jumped on that. So where's the logic in that? What was it about Dogecoin that made it attractive?
I thought it was the most absurd thing I had ever heard of.
Okay, so literally, so this is the same line of thinking where one goes to like a really bad old movie at the theaters because, hey, you've never seen a movie that bad in the theaters, right? I mean, is that it?
Yeah, pretty much. I thought it was, seeing all these different coins come out and then going on Cripsy and saying, oh my goodness, there's like 50 coins they're trading. And then seeing Dogecoin just pop up on the Bitcoin Talk forums, it just seemed too perfect. I had to just get a few.
So from your perspective, it was better for it to be bad than for it to be boring.
Yeah, precisely.
Interesting. Okay. So you got it. So you mined it for a little while and then you went back to Litecoin, and what happened? How did you wind up creating a tip bot around it?
I was on Reddit one night. I noticed that over in the Dogecoin subreddit, they were asking someone to make a tip bot. So I thought, hey, why not? I'll give it a shot. Less than 6 hours later, we had the tip bot up and running. I gave away a few tips, had to type in all the captchas by hand, and then I woke up the next morning and it had blown up. It was on the front page of Reddit.
So then what about this? The two things that you've described for me so far have been something that you've done because it was easy, right? I mean, like if you spent 6 hours creating the Reddit tip bot, that's clearly not, like a trivial task, but compared to other types of, projects, that's a relatively short-term thing. In the mining too, you mined for how many days and got a couple million?
I think I mined for about a day on the first day. Yeah.
So that's something that I've noticed before, is like you talk to people who create new coins, you talk to people who are really interested in new coins. And a lot of times, like you, they're miners, who have experienced this process of, using your computational power to kind of turn it into crypto money and are interested in doing more of that once the opportunity dries up in whatever they're working on. But taking a step back from that perspective, what is Dogecoin to you if it can't be easily mined and if you can't create a service for it and that takes a couple of hours?
I think in those early days, it was very easy. The challenge now is the bot has gotten so big, maintaining it is almost a full-time job. When we first started, I was pretty surprised. I didn't think we'd reach 1,000 users. We're up to about just over 36,000 users that are using the bot right now on Reddit.
Wow. And these people are actually using the bot? They've actually sent or received something?
Yeah. We send about the equivalent of maybe 2.5 Bitcoins a day on Reddit in just tips alone.
Wow. How is that stacking? You might not know this. Do you know how that stacks up against the Bitcoin tip bot?
I think we're actually a little bit more popular right now. It's hard to tell.
I was going to say, that sounds like pretty high numbers, relatively speaking.
Yeah, they don't release too many metrics. I think the last report that I saw that Bitcoin Tip had put out was in October of 2013. And at that point, I want to say they're up into the $60,000 US value number of tips with Bitcoin on Reddit.
So what do you ascribe to the fact that that so much tipping is going on and that, frankly, you have 36,000 people who have actually used the tip bot for Doge? I mean, do you think it's low value?
It's hard to say. I think there's just so many factors involved on why it's so popular. It's weird because, to be honest, altcoin tip had been around for almost, I'd say, a year before I even came on the scene with this one. And my bot was basically just a fork of altcoin tip with one specific currency in mind, which was Dogecoin. And Bitcoin tip had been around for, they're the big player before. So it's weird seeing, Dogecoin taking off when there were perfectly valid ways of tipping others on Reddit before this.
I've been calling Dogecoin like a meme coin. I think it's the first of a new class of cryptocurrency that focuses on more of like an inclusive community built around an inside joke as their primary means of marketing, above like technical innovations or any sort of initial redemption. Like you're going to see some coins come about in the near future that allow you to actually redeem them for certain things. Dogecoin doesn't really offer any of those things, and yet it has become something of a phenomenon within the cryptocurrency space. So, do you think that it's about the meme, or what do you think it is about?
My favorite description of Dogecoin is it's the Ferris Bueller of cryptocurrencies. It's kind of ridiculous. It's very easy. It's very approachable. And the meme just kind of adds that layer of awesomeness to it. But as far as from a technical standpoint goes, yeah, you're right. It doesn't really share anything truly innovative other than the fact that it seems to have just blown up overnight.
And then, of course, the other side of this is, like you said, it has blown up. And one of the ways that has manifested is a subreddit that I've been on a number of times and posted on a couple of times. That's actually how you and I connected for this interview. And, it's a very, very active subreddit. It's probably more active than the Bitcoin subreddit is at times. And again, like I'm just trying to, do you have any insight as to what's going on there that is different than other altcoins out there? If it's not the meme, you're saying that the meme might add something to it. Do you have any idea what it is, or did this just happen to be a perfect storm and it blew up? And then just like Bitcoin, once you get to a certain size, you get attention just because you're a certain size.
And I think that has a lot to do with it, is because we have so many subscribers and it just keeps growing. You have that snowball effect. Originally, I noticed that a lot of the folks that were first coming into the subreddit, they were new to cryptocurrencies. They had never, done anything like this before. So having to explain change addresses, what a blockchain is, those type of things, we were all helping out basically from day one. So we've noticed a lot of the growth comes from people who have never been exposed to crypto before, but, happened to get a tip on Reddit and said, hey, this is actually worth something.
part of the Dogecoin community ethos then is tipping people on Reddit with Dogecoin that are not inside of the cryptocurrency sphere, right? I mean, is that what you're saying? That like this is coming from people who are actually sending tips to other users on Reddit in other places besides the Doge forum and pull back? Because I've seen people attempt to do this with Bitcoin before, but I wasn't sure how effective it was. You're saying that it's been very effective with Doge.
It's been extremely effective. I think in the first week of the bot being up, I actually got banned from so many subreddits. There's a few of the larger subreddits that the bot's completely banned from, but for the most part, some of them have kind of turned around because they see people getting tips in their subreddits and actually enjoying it. It's a really exciting time. Dogecoin's kind of bucked the trend of seeing its value rise was just absurd. I remember waking up one morning and I looked at my phone and my friend was like, dude, it just hit 45 Satoshis. And I'm like, you're kidding me. This meme coin that was just absurd just hit 45 Satoshis. So I was shocked when it hit that. I think now it's up to 200 and something Satoshis over on Cryptsy. Seeing the rise of this coin, it's very fun. I think we're having just a blast over in our Dogecoin. And now that we're just getting to this size, it's pretty awesome to see kind of the possibilities of this going forward.
So what do you think the possibilities are for it going forward? Where do you see Dogecoin in 3 months? Where do you see it in a year?
Well, hopefully it continues to grow and the community continues to be so charitable. The fact that we sponsored the Jamaican bobsled team was probably the most absurd and awesome thing that I've seen us do so far.
So let's talk about that for a second. You guys did. You sponsored the Jamaican bobsled team, and that wasn't an effort that was led by anyone in any sort of official position. It was just something that kind of emerged organically. And I mean, did you guys fundraise for that? How did that come into being?
One user on the subreddit had noticed that the Jamaican bobsled team needed money and posted something. Of course, it got up to the front page on our Dogecoin. Everyone said, hey, this is an absurd idea. Let's take the cool running story of the Jamaicans going to the Olympics and attach it to a coin that started as a joke and suddenly has value. It just ballooned after that. I think they raised the 30,000 they needed, or the 20 some odd million Dogecoin, in about 24 hours.
Wow. So the hope going forward then is that this isn't just a new currency thing, because ultimately Doge is what, a little over 2 months old?
Yeah, just about.
Okay, so, I mean, that is another point, though, is that, like, a lot of these coins, we see that. Doge blew up early, but there are a lot of coins that really focus on the community and focus on, it's such a great place to be, and they give out lots of coins, and everyone's very generous at the beginning because you're still trying to vest stakeholders. But, I mean, like, is there a certain point at which you think that this dynamic just doesn't really grow anymore, or do you think that the specific fundamentals of Doge lend it to like, a longer tail for this?
I think it's really too early to tell, especially with the first block halving is going to happen roughly around Friday of this week. So I think after we see the first halving take effect, that's going to be kind of we're going to see what happens to the network, see what happens to the hash rate, see if it goes down, if it goes up, see what happens to the price. But I mean, for a coin that's 2 months old that has this amount of growth, it's too early to tell, really.
So if somebody wants to learn more about you, find out about your projects, are there any URLs or domains you'd like to give out?
Yeah, you can go to dogetipbot.com or check us out over on Reddit.
Okay, so give me your top 3 cryptocurrencies right now.
Off the top of my head, it's the big 3, Bitcoin, Litecoin, and Dogecoin.
Bitcoin, Litecoin, and Dogecoin. In that order?
I'd put Dogecoin up on top. I'm a big fan of it.
Okay, so it's Dogecoin, then Bitcoin, then Litecoin at number 3.
Yep. Each coin has its merits, each coin has its strengths, and I'm a big fan of all 3 communities.
That's awesome, Josh. Great. Well, thank you very much for your time on this.
Yeah, thanks for having me on.
This is Chris Joseph bringing you news on Next, the first true second-generation cryptocurrency for March 15th, 2014. A cryptographic audit of Next has been completed by Bitcoin Talk Forum's Jesse James. His review of the Curve 25519 and crypto classes in the Java code reveals no red flags in Next's implementation, aside from a signing bug that the developers already know about and are working around. In other news, the newest version of Next, 0.8.9, supports client-side transaction signing, which means that Next clients can now create transactions without transmitting an account's private key over the network. For more general information on Next, head to nextcrypto.org or mynxt.org. And stay tuned for more news on Next on the next Let's Talk Bitcoin broadcast.
So I'm here with David A. Johnston, the co-founder of the BitAngels Network and one of the principals in the investment that happened on Mastercoin.
Yep, Mastercoin came through the BitAngels process back in August, and I ended up as the due diligence lead. And so I kind of nerded out on the protocol, read the white paper half a dozen times, talked a lot with J.R. Willett, about 4 conversations to wrap my head around how it all worked. And yeah, it ended up being the largest deal funded by the BitAngels in 2013. What is now $5 million worth of Bitcoin was put into to the Exodus address during August.
So I may be Guyanese, but you drank the Kool-Aid, and that's a history joke. I was speaking to you earlier, and I heard about Mastercoin, and then when I heard that you were getting involved and that the BitAngels network was getting involved, it kind of piqued my interest. Wow, hey, this is actually something that I should look into. And it's kind of confusing. So Mastercoin is Bitcoin, but it isn't Bitcoin, and it is an altcoin, but it isn't an altcoin. Can you kind of explain to us like what the heck is going on there? Because that's a little confusing.
The easiest way to think about the Master Protocol and the tokens, the Master Coins, it's a standard way to record extra information in the blockchain. In fact, Master is actually an acronym for metadata, archival, standard transaction, embedding records. I mean, that's literally what it does, is it embeds these records in the blockchain using transactions. And so it's a standard for how do you read that metadata. Is that a contract? Is that a stock? Is that a bond? Is that a token in a distributed application? And so it's just a standard by which all the clients that use this protocol and specification will interpret that extra data. And so specifically, this is very important for the Bitcoin community, is the core developers as part of 0.9 are enabling a new type of provably prunable outputs. And this is really critical because it gives the Master Protocol a way to encode this information without causing any bloat in the blockchain. Because these are prunable records, the nodes can choose to prune them out, and they don't end up with millions of additional transactions or metadata attached to those transactions that they don't have to keep track of. And that's a really important technical improvement that has made Mastercoin have a good way to operate in the Master Protocol, a good way to be a good steward of partnering with Bitcoin and not creating an extra burden. And so they'll, I'm sure, evolve a standard by which miners and others that are operating nodes will be incentivized to run what Gavin is calling these archive nodes. And so they'll essentially get a separate revenue stream for operating and storing this extra data in the metadata level. And so that's the basic, is we want to do these advanced features. These are things that would be difficult to include in the core Bitcoin protocol because they create new risks and new attack vectors. And so it's better to experiment with them as a separate protocol that isn't included, but is built on top of Bitcoin. And so that's really the core proposal. If you read the white paper written by J.R. Willett, he describes it as TCP/IP is the Bitcoin layer, and we're trying to do advanced things on top with HTTP, which is the Master Protocol.
Pretty much what that example means is with TCP/IP, you could type in a string of numbers and get a server, or you could type in google.com and have it render Google. Obviously, one is easier for humans to do than the other, and HTTP offered a lot of other easier things, like clicking a link and having it magically go there. That made the internet human-friendly.
Exactly.
So what you're saying is right now you're going to make Bitcoin human-friendly.
We're going to try to make Bitcoin and more advanced features human-friendly.
Tell me about, we were actually talking about something called contracts for differences. So can you explain how all those things fit together and how you're interested in that 3-letter acronym?
Right. So this is an interest I've had for about a year in the Bitcoin space, is these more advanced features that we can build on top of the Bitcoin blockchain. And one of those things that really makes a big difference is having a protocol where you can incentivize the development of these features. And so I watched other projects that have been working in this space. When Mastercoin came along, it really offered a platform where we could build not only contracts for difference, but distributed exchange, user currencies, smart property. And so to sum it up, contracts for difference is one of the more advanced features of the Master Protocol that's being implemented right now. The first features that it really required to be underlining that is the distributed exchange and the ability to issue tokens and to be able to do bets on top of the blockchain. Once you have those functions, you can use that to do contracts for difference. So for the audience that have never heard of contracts for difference, the basic idea is I'm taking a bet on one side and somebody else is taking a bet on another side. And let's say we're betting on the price of soybeans. Price of soybeans is going to be more than $50 a bushel, and the other guy says it'll be less than $50 a bushel. Well, we both put some money as part of this bet into a pool, and the data source tells us what the price of soybeans is at the end of our bet. And it's controlled by essentially the blockchain, by that data source, how much money goes to me if I was right, or how much money goes to him if he was right. And in this way, you can essentially get financial exposure to literally any asset which you have a reliable data source for. And so that's the core of a CFD. So today it's used in the market for somebody who wants to bet that soybeans are going to go up, but they don't want to buy the physical commodity. You can use this type of setup.
So if I were to do a Mastercoin contract and trust the API for the Chicago Mercantile Exchange as a pretty good decider for what the price of a commodity was, we could do this altcoin or Bitcoin-esque transaction where I take one side, you take the other side,
right.
And then a month or 3 months from now, I would be able to lock in the value of that currency, that commodity, in that contract, and then trade it as if it were that commodity.
Exactly. That's a good way of describing it. And the nice thing is there's no central party. Right. You don't have to have a central party managing this process or holding the funds. It's essentially held in escrow by the blockchain and is unlocked by one condition or another and paid out on one condition or another, all of which can be done programmatically. The only thing you have to trust is the data source. And so in the protocol, what we're looking for is ways to, one, both parties have to agree on the data source, obviously, before the CFD is created. And we're also considering ways where there would be backup data sources if for some reason that data source failed, was unavailable, corrupted, something like that. And so that'll sort of be the next step, is how do you manage the risk of the data source. But at least when it comes to the escrow, the terms of the CFD, and knowing that the funds are sitting there. I mean, you can just audit the blockchain, you can just look at the address, the funds are sitting there for that particular contract.
So I don't understand, what value is there in being able to send a barrel of oil or being able to send an ounce of silver and know that it's going to, I don't get why that has value. Can you explain just what it's used in the real world and why bringing this into the cryptocurrency space is going to be of additional value to us?
Sure. So the future is uncertain, right? Nobody can predict it. And so this is often used as a way for people to hedge risk. And so if I wanted to hedge my risk, that let's say I'm producing a product and one of my main costs is, let's go back to our soybean example. And if the price of soybean shoots through the roof, I'm going to be in trouble, right? Because, all right, now my product has become much more expensive. And so CFD is one of many ways in which you could hedge this type of risk and say, okay, I'm going to take a contract, and if the price, I'm betting it's going to go up and somebody else will bet it's going to go down, I'm safe from that risk to a certain extent, depending on the length of the contract. So the classic example is Southwest. Southwest did a brilliant thing back in I think it was 2002, 2003. They bought a lot of oil options. They bought a lot of oil contracts, basically hedging their risks on the price of gas and diesel for their planes going up. And so while everybody else was struggling with these new high oil prices back in 2003, 4, and 5, when it was starting to go from $20 a barrel to $80 a barrel to $100 a barrel, airlines were completely decimated as far as their profit margin, except Southwest. Southwest had hedged their commodity risk when it came to their fuel. And they had done it for enough years in the future that they had this competitive advantage over all the other airlines for years in a row. And so that's a really good real-world example of what a company did to hedge a risk. I don't know if they used a CFD or one of the other options contracts, but it's the same sort of principle.
So in this space, that would mean that a company would use this in order to hedge and then have to use BitPay or something to convert out to be able to then buy that commodity? Or are we like, how would this work in, like, could you give me an example of how a company could use a contract for difference using the Mastercoin program and actually, like, just from beginning to end?
So let's just use the Southwest example. Let's say Southwest had used this system and they hedged and took the contract and they had the additional money that is the difference between the price that went up and what the price originally was, right? That's the bet that they took as part of the CFD. And so if they were to use this system, it would be the same thing. They end up with this pool of Mastercoins or this pool of Bitcoins, whatever they've used for the CFD, and then they can turn that back into dollars or euros or yen if they need to. But of course, as the Bitcoin economy continues to grow, you probably have a place you can buy oil or whatever directly with Bitcoins. And so because these currencies are tradable and fungible, then it doesn't really matter what currency you use to do this type of activity. You're just going to trade it back into whatever you need to buy that asset.
When we're talking about contracts for differences, the other side of it is this idea of, oh, if only we could fix the volatility problem with Bitcoin. Now, when we say contracts for differences for commodities, we really could just apply that to anything that has a spot price that we can look at. So really what you're talking about is the ability to peg Bitcoin to the dollar and then be able to trade dollars over the Bitcoin network, in effect.
That's definitely one of the most controversial aspects of the Mastercoin protocol, especially when the protocol was first proposed by JR. He had written it in a way where it was using escrow backing instead of contract for a difference in order to accomplish this. And so we'll see how that flushes out. I definitely don't want to make any claims because there's a lot more complexity to when you're dealing with that particular use case.
Let alone the legal implications.
Let alone the legal implications. And maybe this is a good point to stop and say, we encourage everybody, this is just an open source software toolkit. And you really have to know your jurisdiction, and you have to know your local laws, and you have to implement this open source in a way that makes sense. Just like with the Bitcoin protocol, it's an open source resource, and you have to implement it differently in China than you do as an exchange in the US or as you do in Tokyo. And so know your jurisdiction, know your local laws. We really encourage people to understand that when they're building things that implement this. The foundation is just focused on creating the open source standard, and we want it to be a resource the community can use to build all sorts of projects.
Maybe I'm being a little dense here, but why? So what's the difference between doing a contract for difference on Mastercoin versus a contract for difference on the Chicago Mercantile Exchange? Is it the fees? Is it the ease? What is it that's the differentiating feature? Because I just don't even understand how I do a contract for difference, so I don't understand how doing it on Mastercoin is better.
Sure, great question. So similar to the Bitcoin payment network, you've got a fraction of the fees that you would pay in a traditional, Chicago Mercantile Exchange. You've got a completely decentralized system, so you can audit anything that's going on, so you have complete transparency. You have no central party that you're trusting with the money, and so we've had that issue in the Bitcoin ecosystem where trusted third parties, if they failed, then it took forever to get the funds back to the people that rightfully owned them. And so one, this gives you a distributed way to store all the records. The contract for a difference, it gives you a way to do it extremely efficiently, extremely cheaply, and it gives you a way where you don't have a trusted third party. And so that's a big advantage. It really opens it up to the world of people that want to build this, and more even important perhaps is it's programmatic. Right, you could now build this into additional applications that use this for all sorts of things we're not even envisioning today in this conversation about commodities and currencies and things like that.
So walk me through this. So I have an interest in hedging against something. So I want to buy a commodity and know that 6 months from now I can still have that commodity, right?
At that price.
At that price. So I go into a contract using Bitcoin on the Mastercoin platform, and I say, hey, I want to buy 1 barrel of oil. What happens to the other party? So there's always a second party who's the opposite, who's the counterparty to that bet. What's in it for them? What do they do?
Right. So you always have to have a maker of the bet and a taker of the bet. And so ultimately people will only do things that they think are rational. So if you're offering a bet that's sort of lopsided or ridiculous, people aren't likely to take that contract. But let's say you make the bet that the price of oil is going to be $100 in a month and it's $100 today. And I'll take that bet. I'll take the bet that the price is going to be $100. If the price goes up, then you've essentially got protection from that price rise. And if the price goes down, you're pocketing that money, right? And so you can write the contract a number of ways. So it's not like there's necessarily a single standard. A lot of times there's a premium or some money set aside, if it's for the person that's taking the bet, depending on the conditions, or making the bet, depending on the conditions. So yes, you always have to have a counterparty. It has to be an economic incentive for both people. So you're making money if you're betting it's going to go down, and I'm making money if the bet goes up. So let's say it's the $100 bet and it goes to $110. Well, we both put $100 into that pot.
So there's $200 in the pie.
Yeah, let's say there's $200, but you could do it a few ways. You could each put in 50, you could each put in 200. It depends on how much swing you wanted to make available or margin on both sides of the bet. But let's say we each put in 100 and it goes to 110. And I took the bet that it was going to stay at 100 or go lower, and you took the bet it was going to stay at 100 or go higher. You'd end up with $110, so you can now buy your barrel of oil at, essentially the $100 price because you got 10 of my dollars.
Right.
And I ended up with $90 left in the pot. So you're picking up whatever the difference is. Or let's say it went to 90, I'd end up with $110, you end up with $90. But it doesn't matter to you because you still spent $100 to make sure you could get your barrel of oil at $100.
Right. So let's say some genius wanted to make a 6-month bet with regards to fixing the Bitcoin to the price of $1 because they just didn't care if Bitcoin went up or went down. They just wanted $1,000 to be $1,000. I'd be more than happy to take the counterparty risk to that of whether or not Bitcoin's going to go up in 6 months relative to the dollar. And then you have your schmoes who all want no volatility in Bitcoin versus the dollar to take that very valuable service and give us the returns for that.
You'd have to find a counterparty, but yes, if you could find a counterparty, then yeah. And maybe for their particular application, that's useful for them.
Right.
Maybe they're in something where they need some sort of standard unit that won't change for whatever reason.
Right.
You're certainly not in the same position, and you would be happy to collect the difference between it going up over a certain period of time. And there is a lot of fluctuation, and I don't try to make price predictions day by day or week by week or even month by month. My strategy is simply to buy and hold over the long period. I don't try to be a day trader. And so, for somebody that doesn't want to see that volatility day by day or week by week, even if it's uptrend over a year or 2 years, that may be valuable to them for their particular business application.
And just to reiterate, you don't ever, in this chain of custody of money, get the actual commodity. What you're getting is the spot price of the commodity so that you could then go and purchase that commodity.
That's exactly right. There's no delivery of the physical.
So when people are saying, well, how does this affect the real world? Well, it's a financial instrument that allows you to make sure that you can go out and purchase that thing. It's not having you get the thing.
Exactly. That's correct. That's a good way of thinking about it.
We keep talking about shorting Bitcoin. Would a contract for difference be something that would allow markets to short the Bitcoin?
I think it could certainly be a tool that is used for that. Some people may have reasons that they want to do that. But I think that's actually a good thing. I think that's the market providing different options to different people. I think what this doesn't provide for is the type of nonsense that you do see in some of the financial markets where you have people placing bets in which they have no collateral or they have no money, often called naked shorts or naked puts or naked buys, where they don't even have that asset. They're just making the bet and they're hoping they win. And if they don't win, they have to go find the money or they default on that contract. And so that's not really possible in this kind of system. This is a system where you have to have the money to make the bet one way or another.
That gives another question, which is, are the funds that you send as collateral outside of your possession? They're no longer in your wallet during the term of that contract?
Absolutely. It's being held essentially
in the blockchain.
In the blockchain, exactly.
Okay.
Yeah. And, you've agreed to that voluntarily based on whatever the terms of the contract are.
Right.
And it'll be for whatever period you've decided.
So it's a trustless-based contract.
Right. It's not, I will send funds to this address, is I have sent funds to this address.
Right. And it's just it's held in escrow, and the blockchain is the thing that executes on that. Right.
Exactly. Yeah.
So how far do you think Mastercoin is from having something like this?
It'll be interesting to see how quickly it gets developed. It's definitely on the radar of the core developer team. First, you need the distributed exchange,
right,
and then you can build all these type of systems on top of that, because that's where you have the recording and the moving of all these different tokens and such around. So, but it's on the short-term roadmap. I don't want to get into an exact date because I don't want to get into the 2 weeks.
Soon, TM.
Exactly. We try to be pretty conservative, but it's definitely on the radar. I definitely want to get credit to Vitalik for suggesting originally the contracts for difference, and he did some work on the master protocol to hammer out some of those details. So I definitely want to give him credit for that suggestion. And when he did, the core developers were very excited about this as an improvement to what had originally been proposed in the original spec. And so now it's in the official master protocol spec. So it is in the spec. It's going to get implemented.
And when we talk about things that have markets adopt Bitcoin, where do you see contracts for differences taking off? Because I hear that Europe is really big on this, and Australia apparently is really big on this down under. Like, is this something that'll bring those markets much further into Bitcoin? Or we keep talking about, well, when are the hedge funds going to get involved? When are the hedge funds going to get involved? Is this something that will really, wet the beak to the point where they can't ignore it?
I think it'll bring in a whole new demographic of people that work in these type of financial instruments. Once they realize how efficient they are, they'll be the ones bringing a lot of expertise to this system and bringing in a lot of institutional funds into this system. The cool thing with the master protocol is we can actually build that as use case on top of Bitcoin. So literally all the money for this will have to flow through the Bitcoin network in order to get there, which is a fun side effect of building protocols on top of Bitcoin. Is it massively increases the use case and utility of Bitcoin itself.
And I'm guaranteeing you that right now there's someone thinking, oh great, that's exactly what Bitcoin needs, more bankers. But you know what? Our boat's big enough for everybody. If they play by our rules, there's very little that they could actually do to us. And quite frankly, if you see someone on a sinking ship, how could you not send them a life raft, right? So,
right.
So the more the merrier, right?
Yeah, we got to help these guys out.
Yeah, we really got to help them from drowning there. So thank you so much for talking, and I would love to see Mastercoin actually be able to do that. I will be the first person to take the hedge against the dollar side of the Bitcoin equation.
Sounds great.
Have a great day, man.
You too.
CryptoKit is the world's first Chrome browser Bitcoin wallet. It's the easiest, fastest Bitcoin wallet payment system. With a simple one-click install, it takes just seconds to get your wallet set up. And because CryptoKit finds the address and payment for you, there's no more fussing around or tab switching. CryptoKit is more than just a wallet. It comes with a preloaded PGP encrypted social network, news feeds from Reddit and Google, and up-to-date charts from exchanges. Finally, CryptoKit Directory allows you to make two-click payments with any of the BitPay merchants. Once you install CryptoKit, you won't need anything else. For more information or to download CryptoKit, visit CryptoKit.com.
The BitGive Foundation is a nonprofit charitable giving organization leveraging the power of the Bitcoin community to improve public health and the environment worldwide. Help us demonstrate the significant impact of Bitcoin in addressing these critical issues on a global scale. Support international giving in Bitcoin. Please visit our website at www.bitgivefoundation.org. That's www.bitgivefoundation.org.
This is Stephanie Murphy for Let's Talk Bitcoin. I'm talking with Marco from Conformal. Hi, Marco. What's your last name?
It's Marco Peerboom. It's a Dutch name, so I'm not even going to attempt to tell you people what it is.
I see. welcome to Let's Talk Bitcoin.
Thank you.
And we're at the Texas Bitcoin Conference. Tell me about Conformal. I know a little bit about them, but maybe if our audience is not familiar, what do you do?
Well, Conformal started out as a security and privacy company. We did a online backup solution, zero knowledge online backup solution. Being a bunch of crypto nerds, going into Bitcoin was relatively simple for us. So we started building a services business around Bitcoin. We did a full node replacement for Bitcoin D for the people who are familiar with that. And now we are basically building our servers on top of that code.
So a full node replacement, that means you rebuilt the Bitcoin reference client from scratch, essentially? Is that what you're saying?
Not essentially, yes. But that's exactly what we did. We rewrote the entire client in a different language called Go. And we are putting up the last shiny bits, and it's going to basically be ready for production. It's open source. Everybody can check it out and play with it.
Wow. So, okay, that's a huge thing. Why did you want to do that? I mean, what motivated you to create a new Bitcoin reference client in Go?
Mm-hmm. Well, that's actually a very interesting question, and it's a very expensive proposition because it's more than a man year. In fact, I'm not going to give you the exact numbers, but it took a lot of development time, a lot of folks. There's not a lot of documentation out there, but the reason was twofold. If we are going to stake a business on Bitcoin, we need the infrastructure of Bitcoin to be as sound as it can be. And being money, it's doubly important for it to be right. So the success of the internet is not because there was one TCP/IP implementation, it's because there were hundreds of them. So for us, it was very important to have multiple clients. So if there is a fork of sorts, then maybe not all the clients are affected, right? And then this is where the majority rule would kick in, and the faulty clients would then get forked, and the chain would effectively become unaffected of that. So, pure selfish reasons for the resilience in the Bitcoin network, and the fact that we can give it away and help some other folks along the way, and strengthen the Bitcoin community. That's just gravy.
Wow. So, okay, that's really cool, and I see the value in it. Like you compared it to the internet, having multiple implementations of TCP/IP. Do you kind of see Bitcoin as one of those base layer protocols that other things are going to be built off of, like TCP/IP?
I really do. I think that Bitcoin is going to be a payment method of the future, and therefore we need to bring it to the people. Bitcoin is extremely complicated. It has been boiled down quite a bit, and there's a lot of folks that really truly understand it. However, once you get into the actual nuts and bolts of it, it requires a very significant amount of man hours and resources to actually deal with the little bits and pieces. So having more expertise than just one group of developers, having multiple groups of developers that do this, that's healthy for the entire community. So I would welcome another 20 implementations. It's just good for us, for all of us.
Yeah. So just to clarify, this works with Bitcoin. Is that right? This is not any type of altcoin or anything like that, right?
This is purely Bitcoin right now. The code is modular enough that adding actually something like Litecoin would not be that complicated. But currently it only does Bitcoin.
Okay. And I mean, so what have you used it for so far? I know this is kind of new, just finishing it, but what have the implementations been like so far?
Well, we obviously built our entire CoinVoice project on top of it. So CoinVoice, for the folks who don't know, is an invoicing service, or we are a payment processor, so we can take either payments in BTC and then disburse in USD, or the other way around. We can accept payments in USD and disburse in BTC. The entire backend is running on BTCD and the other wallet implementations that we made. So when you actually make a payment on our website, what happens is that it flows through the code that we have written, and it gets put out immediately in the mempool. So you get instant gratification that the payment actually has hit the network, and then you just sit there and wait for your confirmations to show up. So the code is in production today, and we use it. It's great.
Wow. Okay. So a little more about CoinVoice. This is something where you can invoice somebody in dollars and get paid in Bitcoin, or vice versa. Is that right?
That is exactly correct. So let me use my favorite example. One of our first customers was a German journalist, and he writes publications for a U.S. company. So once a month, he basically writes up an invoice on our website, and he invoices the publication company in U.S. dollars, and we pay him then in Bitcoin.
That's cool. That's very useful. And so is there a fee for that service, or are you processing the payment? How does that work?
Yes, there is a fee involved, and there's actually two fees. There's a fee for going from USD to BTC, and there's a different fee going from BTC to USD. The reason for that is that obviously when we disburse BTC, we assume a risk, because if there's something wrong with a transaction or whatever you want to call it, so we have a higher risk. Currently, the number for that is 4%. The other way around is the standard market fee of 1%.
Okay, gotcha. So 4%, that's almost like a credit card fee, right? That's kind of similar to that. And that would be if you're going from
USD to BTC.
US dollars to Bitcoins. Okay, gotcha. Well, I'm thinking about it now, and that's cheaper than buying Bitcoins on an exchange, typically.
That's the idea. And not only that, is it's also instant, effectively, right? So when we can disburse the Bitcoins very, very quickly, there's no wiring fee involved with that particular transaction. So there's a few benefits that exist there. So one of the things that I actually would like to mention on this is that normal businesses, they accept credit cards, and there is a markup on the credit card that the consumer just simply doesn't see. So I hear the criticism, right? Oh, but it's so expensive. Well, it's the cost of doing business, right? Moving money is just simply not free.
You're just making that process transparent instead of building it into the price where people can't see it, right?
That's right. And but if you build a business, you should obviously build in your processing costs into the price of your business. And that's what the guy who sells widgets in a store has done that, because they know that you're going to show up with a credit card. I hate to say this, but there's not a lot of people doing cash transactions anymore.
Right.
So there is a cost of moving money around the world, and we make it easy, secure, and actually relatively cheap once you actually measure it up against banks and some other institutions.
Yeah. What about the cost of building this Bitcoin D implementation and Go?
Well, we have a handful of developers that basically work on this full time. At this point, we're down to about 2 guys who are working on it full time, because it's just wrapping up things, and adding more people at this point would just not help, would not make it go any faster. I'm sure I should say this, but the way we call it is 1 woman, 9 months, right? Not 9 women, 1 month to produce a baby. So we're basically now finishing up, and so there's no longer the amount of people on it. So let me just say a couple of nice things about BTCD, which are really cool. And one of the things that we did from the beginning is that everything has to be tested automatically. So you can literally, when you download the code, run the tests, and virtually every line of code in the code base is tested and validated. So we can pretty quickly move or detect if we made a mistake when we actually put out a new version. So, in fact, actually deploying a new version usually is a couple of hours worth of time.
Wow. Yeah, that's pretty good. What are some of the other differences between the, I don't know what to call it, the conventional Bitcoin client and the one that you built?
Well, so the big one, but actually Bitcoin D is actually starting to do the same thing, so I'll take that as a compliment that they liked what we did, is we actually made some separation between the different parts within the code. So what we did is we split up the chain from the wallet, and in fact we also split the whole wallet portion from the GUI, the one that actually shows you how much or how many Bitcoins you have sitting on your computer. So we made that in through distinct layers that can do different things based on what you need. So if you need to write an application that only requires chain questions, now you can only basically run one portion of the code that handles all the chain-related portions. So that gives people who want to write code quite a bit of flexibility to pick and choose the building blocks they need to implement whatever it is that they want to do with it.
And is there ever a chance that this could become the reference client, like if enough people start running it and miners start using it and so forth?
Well, that's a tough question. So again, I don't want to be the only guy out there. I really don't. I mean that. But well, you know what? I hope that. So let me say something else nice about our code, because I'm pretty proud of it. The BTCD code is very cleanly written. In brand new people that show up, and some folks have shown up, and they basically say, "Oh, I can completely read this," a couple of hours in. The Bitcoin D code is a little bit more. It's evolved over time, and therefore it's large and not always clear what the intent is. I'm not trying to say anything ugly. It's well-written code. It's just complex, very, very, very complex code. And since we got to do a from-scratch implementation, we were able to take some of the complexity out and just simply remove it from the code base. So I'm not trying to say anything ugly. It's just our code is slightly more readable because it wasn't evolved. It was basically a clean room implementation.
Right. So I'm picturing like there's a couple different ways you could build a 3-bedroom house, right? You could take a 1-bedroom house and put an addition on it and then put another addition on it. Or you could build it all at once, 3-bedroom house. And they both accomplish the same purpose, but they're just constructed a little bit differently. So I see kind of a comparison there, right?
I think that's a fair comparison. I really do. The thing is that the additional thing to add there is that the 3-bedroom house that was built in one go was also not really designed at that time, right? So it was a bit more ad hoc. So again, to say something nice about the Bitcoin D client, it's an impressive amount of code. It's very complex. It does what it does very well. But let's have more of them, right? Let's have more diversity so that the network itself becomes more resilient.
Do you know of any other projects ongoing where people are trying to build more of them?
Well, there's been a couple of failed attempts. There was actually one from a German fellow. Actually, he had a company based it was called Bits of Proof, and he had done a full client implementation. Although I think that they have actually at this point dropped off of out of the community, which is unfortunate. I really was hoping that they would stick around as well. But the thing is, if you start playing in Bitcoin, the reference client seems deceptively easy until you actually get to the details. And like I said before, it's an extremely complex piece of software. And a lot of people underestimate the amount of time involved in getting that off the ground. But we have a professional development team. Most of us are crypto geeks, so we basically were able to get into it, and we have different people working on different areas of that code base.
Yeah, congratulations. That's a really cool feat. Is there anything else that you wanted to talk about for this interview? I mean, we touched on Coin Voice, and we touched on, obviously, the client, but what other projects are you working on?
Well, we are obviously now starting to... we are at this point ready to put Coin Voice out there to the larger community. So we are not VC backed, so we don't have the crazy schedule that you got to deliver, the next $100 million project every other day.
Yes.
So, and that basically gives us the time to spend a little bit more time and do things right. We really care about quality quite a bit. So when we just started, it wasn't as polished, and it's getting more and more polished over time. And I think at this point we are actually ready to start on large volumes of customers. And we have all kinds of plans in the future for it. One of the important ones is we are going to start localizing, because obviously, folks in Southern America want to be able to, just handle the website in Spanish, and so we're working on that. So we have a couple of translations. So those are going to come up pretty quickly. We started doing e-commerce type deals. So we have now 2 reference API implementations. So where you can basically directly integrate within a cart and then charge Bitcoin and then being paid in US dollars.
Wow. Yeah, that's cool.
Right. So you can literally just add it to your... right now we have 2 implementations, one for WooCommerce on WordPress.
Hey, I used that.
All right.
Cool.
And the other one is Drupal and UberCart. So we have written 2 references for that. So actually there's an underlying library, and they both use that same library. And then the actual plugins basically literally translate between Coinvoice and whatever line items the invoice consists of. Mm-hmm. So, and we're going to add a couple more. So we're thinking about OS Commerce. We're thinking about Magento. So, and there's a couple of other really large cards out there that we are going to integrate with and basically make available to the general public in the next couple of weeks.
Wow, so making it easier for people to facilitate Bitcoin payments or fiat payments all around the world.
Right. Well, the idea is that not everybody can and is capable of running a wallet, right? It's a complex piece of technology. So what we're trying to do is make it easier for people to use Bitcoin. And we get something for free is we get liquidity in and out of the Bitcoin network. Because people just simply don't have to go to an exchange to do their transactions, right? So they can get paid in Bitcoin and then use the Bitcoin to pay for different services and vice versa. So we are hoping that more people can adopt Bitcoin using our service. And again, that will just pump up liquidity, badly needed liquidity, into the Bitcoin network, so that when something bad happens, that the price swings aren't as dramatic.
Right. Okay, cool. Anything else you want to add?
No, thank you so much for interviewing me.
Thank you. And where can people find you online?
Just coinvoice.com.
Just coinvoice.com.
Right.
And then for Conformal, do you have a different website, or is it at Coinvoice?
No, actually, it's conformal.com as well. And then all our code, all reference code is out there, and it can be found on GitHub under the Conformal site.
Well, excellent, Marco. Thank you so much. This has been a real pleasure to talk to you.
Thank you.
So I'm here at the Miami conference with Sheldon Weisfield, who is one of the chosen few, one of the distinct, the brave, who have a RoboCoin coming his way.
Absolutely, Jonathan. It's very exciting to be able to announce that CoinVault ATM, based out of Houston, Texas, will be one of the first ATM terminal operators with a fully functional, bidirectional, FinCEN-compliant AML KYC to give a consumer the opportunity to have a fiat currency in, fiat currency out option. Effectively, we are going to be the on-ramp to the Bitcoin world in Texas, Houston being the fourth largest city in the nation, representing a global economy in petrochemical, finance, engineering, and technology.
That's quite the mouthful.
Oh, I'm telling you, and this event here these last 2 days has been absolutely mind-blowing to meet such dynamic people that are in a space that truly is the evolution of the next major paradigm shift that we're going to deal with.
So you're going to be launching a Bitcoin ATM in Houston.
That's exactly the plan.
And when's that coming? What's the ETA on that?
We're looking at the last week in February, first week in March. The location is going to be a central business district location. It's going to be in a coffee shop style environment that's going to give the consumer an opportunity to use the internet, because our ideal clients identified as being, obviously technically and computer literate. They're looking for that experience, and it's got to be a convenient location to the customer.
Why Houston?
Houston's the fourth largest city in the nation. We think that with Houston's demographics and the diversity that Houston represents, and we do have a meetup group, a Bitcoin meetup group in Houston, and we think that this will be a good proving ground and gives us an opportunity to build some core data, legitimize what it is we're going to do, as our objective is to launch multiple markets across the United States, and then an international strategy to go into some other foreign markets.
It's kind of blowing my mind that America is finally getting an ATM. I always felt like this war would be won last in America, and it seems like we're kind of, we're not trailing Canada far behind by too much.
Well, and I think that the challenge has been about the fear, and the concept or the acronym of fear, as I define it clearly, is false evidence that appears real. And so people aren't willing to take action in the U.S. because of that fear factor. We're of the opinion that in order to be a pioneer, in order to make a paradigm shift, you have to be willing to step out of the norm. And that's what CoinVault ATM is positioning itself to do.
What I love about your model specifically is the way that you look at what an ATM means. Now, a lot of the other businesses have their traditional pay for the space sort of revenue share for being able to be given the privilege to put their ATM in a retail location. Your view on it is a little different. Can you tell me a little more about that?
Jonathan, let me tell the listening audience that what we're bringing to the world is a paradigm shift. We're bringing to the marketplace something that will drive traffic. We are the destination. People think Miami Beach is the destination, and it is when they're coming to Miami. It's South Beach, where we're at here today.
Right.
But the reality of it is this terminal is going to drive thousands and thousands of customers to a destination that those customers otherwise would not end up in. And so therefore, unlike a traditional ATM, automated teller machine, we're providing a BTM, a Bitcoin terminal machine, which will create the destination for these people to go to get on and off the Bitcoin highway, to have fiat currency. You'll have international travelers. Houston represents a global marketplace with 2 international airports where people will go to our terminal from all over the world to convert their Bitcoin to the fiat currency known as the United States dollar. They can then spend, and that customer would not come to our retail merchant. And so as a result of that, a billboard pays for the numbers of views, that how many eyes are going to see that billboard. A newspaper, you pay advertising costs because of its circulation, and the Bitcoin terminal retail locations will pay us a fee per transaction based on the number of transactions coming through that door, because we know that that customer is going to also spend money in that retailer's location.
Well, I mean, you also know that that customer wouldn't have been there were it not for the ATM.
Exactly.
So effectively what you're doing is you're looking at a retail organization and you're saying, hey, look, use us as a square footage loss leader, and what we do is allow you to upsell the customer on all your margined items.
Jonathan, I couldn't have said it better.
And I just think that's such a novel idea that, you know, like all things in Bitcoin, it defies the fiat equivalent.
That's correct.
And rather than you paying a merchant $1,000 a month, what in fact they're doing is paying you for every Bitcoiner you brought their way, because they could sell them coffees or trinkets or WizWats or whatever it is that the store has. So I just thought it was phenomenal that, you know, you're making the system work for you, my friend.
Absolutely. Well, the idea here is it's got to be built on a win-win relationship.
Right.
And we know that in a free enterprise environment, it's about bringing value. And we're going to bring value to a retail merchant in a capacity they really don't understand the model. We're going to actually pay the retailer a utility reimbursement charge. So the retail merchant doesn't have the concern it's going to cost them actually to put the terminal in their location. But we're going to have a compensating factor that based on the total number of transactions, we'll get a rebate back per transaction. So at the end of the month, we know that the utility cost that we may have contracted to reimburse them for that space is going to be far less than the number of transactions based on the number of customers that we put in that store.
You're in Houston. If there's a business in Houston that would want to get in touch with you as it relates to maybe being in their store,
Absolutely.
How would they go about doing that?
You know, they can contact us through the info at coinvaultatm.com. And through our info at coinvaultatm.com, one of our representatives will certainly follow up with anybody that would be interested. You want to use a standard old-time telephone technology, dial 281-236-3625. The CoinVault ATM terminal is a really unique opportunity. We understand that the consumer needs to have an on and off ramp, and we're going to be that opportunity for the consumer.
Well, I look forward to when you announce exactly where it is in Houston.
Absolutely. That will be obviously a media event, and so at this point we're withholding the exact location.
But it's going to happen.
It's going to happen.
All right, man.
And it will happen quicker than later based on the delivery of our first machine.
Well, I look forward to seeing it.
Good. Thank you so much for this opportunity, Jonathan.
Have a great day.
Thank you, you too.
Thanks for listening to episode 92 of Let's Talk Bitcoin. Content for today's show is provided by Stephanie Murphy, David Johnston, Jonathan Mohan, Sheldon Weisfield, Marco Pureboom, and Adam B. Levine. This episode was produced by Adam B. Levine with additional production by Stephanie Murphy and Jonathan Mohan. This episode was edited by Denise Levine, Matthew Zipkin, and Adam B. Levine. Music for this episode was provided by Jared Rubens, That Doge Song, and General Fuzz. Any questions or comments? Email Adam at letstalkbitcoin.com. Have a good one.